We've got Martiak joining the conversation now from Premier Wealth First Allied, and our Ben Willis, friend from the floor here from Princeton Securities. Welcome to you both. Ben, what are you hearing on the floor right now?
I'm hearing a lot of noise and chaos as to exactly what we just heard. Is this a temporary bottom? Will we be able to make it to new highs later in the year? Was Alibaba the indication that the financials are a big story? I would agree the financials are a place you should have your shopping list out, but more on the regional side. If you take a look, some of the under-the-radar kind of looks, you have master limited partnerships today trading on the plus side. There was an IPO again, the master limited partnership. DM trading up about $6 when I stepped in front of the camera from its IPO price just today alone. So the Philadelphia Oil Service Index trading on the plus side with some upgrades in that sector. So all is not bad, particularly in the energy sector. You would think we'd be taking it the hardest. So that is obviously what let us down, but there's a lot of noise, and this is a trading opportunity without a doubt.
Yeah, Mark, what's your read? Does it mesh with Ben's?
Yes, it does. In fact, I'm telling my clients now is the time to put money patiently to work. Fear and capitulation are good to be able to make the market bottom. But if you have a long-term horizon, as an advisor, as advisors, we're making sure that the long-term horizons and asset allocation are in sync for all of our investor portfolios.
Just want to be clear. Do you think that that's what happened this morning? Was that capitulation in the equity market? Do you think we're getting close to a bottom, or is this a mere trading opportunity for a longer-term investor?
Well, I wish I knew the exact answer, Scott, but I do think we still have a little way to go. I expect a little more pain, at least throughout the rest of this month. So if we're off 6 months and we've given 6% year to date, and we've given back the gains that we had in the market, I still think we have a little way to go, because I wouldn't be surprised if it reaches 10%. And I'm cautioning and managing the expectations.
That's not the boldest call in the world. I think we're down 9, Mark.
The S&P did get within about 1% or so. I mean, the number on the S&P from an intraday basis is 1817.
Right.
For an intraday 10% correction, a closing 10% correction would be 1810. So, Mark, really, I mean, stick your neck out.
I think it's a great time to buy, but I do think this volatility will persist. But for longer-term assets and investors, now is the time to expect no surprises. I mean, we should put our money to work, and that's what I'm telling my investors to do. Put the money to work patiently and be disciplined, and don't push the panic button.
Then just briefly, can you touch on volume for one, and again, the kinds of swings that we're seeing even into the close here?
The volume has been much better, again, indicative of there's a lot of trading money in this market. And this may not be a Warren Buffett moment, but I believe this is absolutely a time that you will look back in late December and realize you really should have been buying on a day like today, not panicking and avoiding it.
So do you disagree with what Joe just said when he said the highs are in for the year?
I do.
How much further, why do you have such confidence, Ben, and how much further do you think we could go to the upside?
The fundamentals of the economy of the United States, which has led this entire world economy to its bottom, is what's going to make the market rise. And the Dow Jones and the S&P 500 are advanced indicators of what's to come. We are repricing now what's been going on in the currency markets and the fight that's been going on between the central banks of the world. I'm not saying we're going to have a 10% increase by the end of the year, but I think right now is a buying opportunity for those people that should have their money in the stock market if they even want to attempt to retire on time.
What would you be buying then, Ben? I mean, there's a lot of damage.
Belts and braces for me, as far as it goes. Take a look at the utility stock, still putting on a great performance. If the economy improves, people are still going to be using electricity. MLPs, it doesn't matter what it costs to put what the cost of the product is in the pipeline, they're still going to have to pay to use the pipeline. The regional banks, if the economy is in fact improving and rates are going to go up, that means the spread on their book to loan is going to make them money. So that's another place I would be looking.
Yeah, Mark, I mean, what will you be looking for off the open tomorrow? I mean, what's going to help the viewer at home really get a grip, you think, that the sell-off that we've been in the midst of now for several days is nearing an end?
Well, there's no bell that marks the bottom, right? So as a Main Street investor, you have to listen to your advisor if you're working with an advisor. As a high net worth, ultra high net worth investor, which I work with many of them, they are fearful, but with the right discipline and the right patience, we look at our portfolio, we look at exactly where we want to be, We want to be, you know, in the low beta large cap. We want to be in emerging markets with regional precision, in particular, you know, India, Brazil, China. We still want to be there. We want to avoid mid cap. We want to avoid small cap. They're riskier. We want to avoid high yield. We definitely want to avoid certain fixed income sectors like senior bank loans, but we do want municipal bonds for the high net worth, ultra high net worth investors.
Interesting, because you know, you would think maybe by part of your thesis earlier and where you think the market is, certainly how it's setting up perhaps in your belief for the long term, that small caps and mid caps may be where the value is relative to how they've gotten crushed.
They've been getting crushed. The outflows from the small mid cap started in Q3. You know, 1.9 trillion you know, exchange traded product market, and most of the inflows in the third quarter went into the large cap, low beta funds. So, and emerging markets as well. So Europe, because of the stagnation and the deflation, that really concerns me. I would be very, very careful. So I understand what you're saying, Scott, about buying when the values are down, but I'd still be careful that risk is off on those small cap and mid caps.
Understood. Ben, the bell's going to ring in 30 seconds, so give me a short answer. Ebola, how big of a factor is that in the psyche of traders?
It's a huge psyche for it, impacting the trading decision, but for the actual market impact, I don't really think it's as significant as it will play out to be anyway. It should not be as significant in the end.
All right, well, there it goes. The Dow Jones Industrial Average.